Yo, it's a Tuesday and I fucking forgot to take the garbage out. Son of a bitch.
Me too, but I didn't have any. Got lucky.
Garbage. There's a lot of garbage going on, Matt. A whole lot of garbage we're going to talk about. Good morning, good afternoon, good evening, depending on where we are on this flat earth. Matt, happy Tuesday to you. MarketVitals.io is the show, is the website. Definitely website. Market Vitals, the stream, brought to you, Matt, by our friends at Maja TV with another gift idea this morning. And it's another apron, but it's another beautiful saying. Do yourself a favor, grow someone a tomato. Matt, there's only two things money can't buy, and that's true love and homegrown tomatoes. Guy Clark, we talk music. We won't talk it today. But anyway, redbubble.com is the place.
Don't talk. You can't buy true love, because on this week's episode and final of the season 3 of Secession, Connor asked his hooker to marry him, and she said yes.
All right, Guy Clark, you're going to need to change the lyrics. There's only one thing money can't buy, and that's homegrown tomatoes. Grow someone a tomato, for God's sakes. You got time to plan next year's garden. That's what winter's for, right? Winter's for the winter meetings for baseball rosters and planning your spring garden.
I think you're doing Chauncey Gardner quotes now.
Chauncey. Dude, I did appreciate that. Man, I love this from Doug, Benny and Wisco. The scene from a restaurant. We don't eat eggs, meat, fish, dairy, or gluten. What would you recommend? A taxi. Get the fuck out. Forget about it. Get out of here. Matt, we bring this in because we saw yesterday, and we've been a big no bet on Beyond Meat, but I saw yesterday at some point Taco Bell giving up their use of fake protein. Talk about a menu full of laxative-laden foods. Taco Bell. When Taco Bell says your food's no good for us, it's probably time to check the exits.
Because you would really, I always thought, like, even the as a big fan in high school growing up of the 17-cent bean and cheese burritos, right? Big fan. How can you not be a big fan with a budget of $1? You can get
bring up Beyond and let's talk about it.
Well, it's interesting that the stock has actually rallied today about 6.5%, and here's why. You have the reason why the thing can stop bottoming, because you got the bad news finally out of the way, right? So I think that's what you're seeing here. The news finally hit. They needed a reason to rally. It had been selling off. 62 was the low, and we have bounced today, but not so fast as Lee Corso would say. He got a long way to go. I think, we talked about this before. This is like the opposite version of like Microsoft and Apple. They're going to go up until the end of the year. This is going to go down until the end of the year. Nobody wants to show that they owned the dog of the street, any of the dogs of the street, and this is one of them. I mean, this stock was trading, in August at $240 during the pandemic, when I guess fake meat was good, and then it went, or that was before the pandemic. But that was the high before, and then it bottomed in the pandemic at 48 and went to 229 again. That spike obviously was news related. I don't remember what it was, but it has since fallen all the way back to 62. Why not 48? Why not have tested that low again? And that would make a lot of sense, right? And I think at some point, maybe in 2022, it might be a buy. But you're really dealing with a broken stock right now, and there's really, more news, I guess, like this of losing customers that potentially could help your bottom line. Doesn't really, play well.
I always had a problem with it, Matt, because I've eaten at plenty of vegetarian or vegan restaurants or food carts. They do a great job without fake meat.
Right.
I mean, if you're looking for a healthier choice, there's tons of them out there. If you want to make a choice away from meat, why would you go to something produced in a lab with an ingredient list?
I think it's the same reason why you enjoy getting 7 boosters. You don't know what's in it, but you want to keep getting them. I don't know, because you want to be part of the team, I guess. I don't know. I don't get it.
You know, man, on the subject of fake meat, let's go to fake exercising. You have been wanting to bring this in for a while. Peloton, the greatest clothing rack going, and racket for your exercise dollars, apparently.
Well, I mean, we talked about it, at length when we were talking about Zoom. We were talking about all these names, and this peaked at the first part of the year this year, 171. Zoom was a little earlier. I think it was about October. It was a quarter ahead, but it's the same story. It's the right side. Once you have a left side that goes parabolic like this, it always reverses. It always does. Nothing goes up forever. There's always a balance, whether it's Amazon in 1999 or Amazon in 2021. Like, these moves that they've had won't sustain themselves forever unless you get more buyers. You have to either get more buyers at higher prices, or you have to come back and get more buyers at lower prices, right? Those are the two ways you can find buyers. So once you run out of the people chasing, which we did, obviously, in a lot of these pandemic names, and there's so many of them, Zoom, Peloton, Fiverr, Etsy, still room to move. Roku, right, is one of them. Netflix, I would argue, is one of them. And they're all rolling over. And that's because people have said, we're done with, COVID, except for in New York and California, where they want to, totally, lock down their huge, populations. But that's another story. But look at this thing. I mean, it's right back into the hole, 37.54 in Peloton, up a little bit from the low yesterday. But Bob, it looks like it wants to go to 27. Even at these levels, Bob, it's worth $13.5 billion. And you want to look at the sales that they did. And their sales, by the way, are declining. Let me show you this, because this is interesting. And I was looking at this yesterday. I think, let me give me the peak earnings here. Might have been this one. So the peak earnings have it in February, yet the stock peaked before that. So again, insiders always know. They begin selling before this news hits. So 1.06 was the reported revenue for the quarter there. The next quarter, they did 1.26, yet the stock had fallen because obviously the guidance, wham, look at that, 30% off in August. And the latest, Bob, 45% off from 1.2 billion down to 800 million in a quarter. That's significant revenue loss. And that's because nobody's buying their product. That's because they had coat racks from the 70s, 80s, 90s. It happens every decade. You go through a trendy
exercise.
I mean,
slash
Nordic track, right? Nordic track for the decade of the 80s was big, 80s and early 90s, and then it peaked. So, it's the same thing. Get your fat ass out there and exercise, but you don't need a machine. You don't need a digital exercise thief, that costs you $5,000 to be a coat rack to do this stuff. I mean, that's an expensive product. But anyways, right side parabola. And
right on. And we're going to stick with this. I want to jump to Penn Gaming, but first let's talk just a little bit about the game last night. Incredible game. NFL, the skill level, dude, on some of these teams is just unreal, but more unreal to me. And it continues to show all the time. And it's really always been with good handicapping, like how hard it is to make money gambling. These games go down to the final play like many times. It's unreal.
Again, I'll argue with anybody. You're lucky or you're very good at reading within the lines, but pro sports in general are impossible to beat. They're impossible. Like, if you're a 500 player, you're killing it. So,
and not only that, so there was an advertising model, right? The marketplace is so crowded now with everybody in on it, right? And so Penn Gaming, bring it up. This stock looks absolutely crushable right side to further having again is not out of the realm of possibility here.
Well, listen, we've been calling for 40. We've seen 46.06, so we're almost there. Guess what? 40 is just the top. Now it's not the top of value. But it was interesting. I was back at this chart this morning earlier with somebody at my office, and I was just looking at it, and I was explaining, listen, when this thing was 170, we were calling for 40. And here's why. Let me show you. It's like, and so I went back in time and said, okay, when this thing broke and made that high there, you're like, okay, it's going to trade back to this top of this level, 40. And so you can see that pretty clearly. Like, this stuff doesn't change much. Let me just take it all the way back there. There you go. But you see that. I mean, it's basically coming back to the levels it should, right? So here we are now. Now you come back to the full Monty, and just change the time frame here on the chart so we can kind of clean it up here. Maybe I'll be lucky. My charts don't seem to be populating too quickly.
Technology working slowly today.
Seriously. Anyways, it's now that the right side is clearly forming, but we're still working our way back to that 40 number. So there's a huge hole. We're finally in it here, Bob. This is the next hole. This is where the next battle will be, from $10 to $40. So we're not done.
And that's just, from Stoudemire's work, depending on the time frame, you start trading below that $40 and into the meat of that longer term profile. That's what I mean having again, because I know when you fractal just a little bit there, the point of control is down to $14.
Yes, exactly. It's $20 here. Then this is just the short term. So you're exactly right. Like, there's more to come. And, and we kidded for months that, Davy Boy was giving up, 3x of, a lifetime of potential earnings that he'll never see again, versus, since we talked about it yesterday, versus Elon, he's selling at the top, not the absolute top. I'm not, let's not be ridiculous, but he's selling above this last breakout area, which was the old top. So he's pretty much above that crazy level. And the stock is worth $1 trillion today. Oh, where's the pivot on this one? Back at $65. Guess what? At 65, Bob, that's 1/15 of where we are. That's still bigger than Ford Motor Company. Back down here.
It's a clown world, Matt.
Clown world.
Clown world. And it's not going anywhere soon if you believe in the advertising model of the World Economic Forum. I got to bring it up because I thought it was a joke, Matt. And I'm going to roll. It's this one. You shared it. You will own nothing and be happy. Rewriting the code of life.
No. You will own nothing and they will be happy. You didn't see how
for sure about that. Let's just be clear about human systems. Somebody's making bank. Right? There's always a chief. I don't care what you want to tell me. There's always a chief. But the gene editing technology will allow us to redesign whole organisms, but it gets better as we roll here. This could enhance every aspect of our existence, from human health, right, to material fashioning, a zero waste economy. But then this gets even better. Redesigning organisms for beneficial purposes, allowing us not to edit genomes, Matt, but also importantly, write a new code for life. Pretty sure I'm not that down with that. I don't know.
Transhumanism, maybe?
Wait a second. I got to let this roll just a little bit more. Yeah. We could cut unwanted sounds and unwanted sights out of our reality, Matt.
So you want batshit crazy? We can ignore
diminished reality glasses would allow you to remove things that you don't want to see, like garbage and people. Let me say that again.
Garbage.
The glasses you put on in the clown world now take out things that you don't want to see. You have an enhanced reality of if this isn't the Stepford Wives, I don't know what is. I mean, it's unbelievable. Like, my question to you was coming in, like, if they take the garbage out, does that mean that you just trip and fall over it and fall into the garbage? I don't know.
Well, you've seen the commercials.
He's really aiming high here for us all to have an alternate reality. I don't know. I don't even know where you go with price discovery on it. But let me share something else so we can get back to reality, because you might want to put on your glasses if you are a user of electricity in Germany, because the year ahead power price data, a 5x from where you were paying for your power, basically from 2017 to 2020. Talk about not being transitory when power prices are being priced a year out in Europe this high.
But what that does, Bob, is that plays into Professor Klaus's, game plan, which is make things so unaffordable for people just to live, from housing to energy costs to food costs, which is all part of their thing, right? It's failing. But the only reason it's even had this mild success is because of Biden and his energy policies, right? If they didn't do that, they would not have this problem in Europe right now. They would have been self-sufficient like we are in the United States, and they could have been. But since they handed it to Putin, who, is in bed with Trump, but yet he's not. But Biden is. It's very confusing. It's very confusing.
It is very confusing. And PPI out today, again, back to the producer side of things, because your energy costs directly in line with your producer side cost, again, through the roof. And we find it interesting in the bonds. Let's pull up the bonds because from my vantage point, the fight going on in the bonds now is this reality that rates have to go higher. Yet there's a bid there because it is, for my money and my years of trading, there's not a bigger avenue for flight to quality than the bond market, right?
Yep.
I mean, you can deploy a shit ton of assets to the bond market for safe haven. And so flight to quality versus this fight that rates are for sure going to go up. The timeline is in question and is being argued about, but the bond action tells you this. It's just back and forth in this big meaty range.
Well, and I brought up a longer term chart, Bob. This is a daily going back to, this is a couple year chart, right? And yeah, we've talked about this range. We're stuck in the 155 to 167, basically. You could even go back to earlier this year in the spring, we got down to 152. So $15 range. And right now we're trading at 162. You dial in a little closer. You obviously see the meat there, but you dial in closer and we're having a hard time getting above 164 and a half. The last couple times we've been up here, this was the last high. We sold off, and now you can see this again. We sold off pretty hard down to 160, but then banged back to the top end here. We're at 162 and 3/4. It's struggling. It sold off and now it's rallying again. But it's just like, as you said, it's a deep rally, or it's a deep battle going on in these zones. And it's the last Fed meeting of the year is happening today and tomorrow, with the last rate announcement tomorrow. But as you pull back here, this feels heavy to me, right? It still feels heavy. Now, as you go to the more meaty time frames, it's a total battle, and there are bodies littered all over each side of it right now. Honestly, like if you're playing a longer term time frame, this is not an easy market to trade if you're trading bonds,
especially if you're trading size. I mean,
yes. Yeah, and you're trying to decide, are we going below 157 or are we going above 167? When you're right in the middle, you're literally right at 162. That's a battle. Flip a coin and place your bets, because this is a big boy battle, and kind of that 164 continues to hold. So, I think 164 is your top, 157 is your bottom. Play it like that, and then if it gets over 164, your real top is 167, and et cetera. Your real bottom below here is 152. So, you've got essentially a 7-point, near term, range, and then a $7 range, and then you've got above and beyond that a total of $15. So it's wide, and it's a bloodied battlefield. And I would just say, make sure you probably need to shorten your time frames if you're going to trade this, and know the different levels, and just own them and trade it. If you're going to trade it, you got to be pretty aggressive in your stops and being careful here.
Right on, man. I wanted to just spend a little bit of time talking about Parabola. We've been saying it pretty much for a year now, right? I think we've said it probably in every broadcast for a year.
Yeah.
Parabola from Merriam-Webster, Matt, from the Latin word parabola and the Greek parabole, meaning comparison. Parabola meaning, from our definition, comparison. Yeah, that means that the left side and the right side end up looking very similar. But what I wanted to do further than that is talk about, what does it mean? Like, how do you know you got the right side going? And obviously and I just want to talk to you about how I know it's going, right? And for me, it's all about momentum levels and slopes of standard deviation lines, right? Especially the momentum level lines. And this is Microsoft, and we talked about this one. Now, from this daily standpoint, for me, it's for sure right-sided here. You got falling away slopes on the standard deviation modeling, and you're below the momentum level, the lower momentum level, coming in at 327 today. Find it interesting, though, as we fractal out, that so it's a parabola on the daily. On the 3-day, not quite yet. You don't have these bands with that negative slope to them to be fully right-sided. On the weekly, same thing. Don't have the negative slope. And then on the monthly, let's do it. Again, same thing. The monthly momentum level's down here, all the way down here at 308, right? And I know I did this the other day, and I just want to continue doing it because when you look at the yearly chart, I mean, it's just unbelievable. Every time I look at it, it's more unbelievable. And by the way, TradingView kicking in 2 years worth of data here. I don't know why that double is there, but this is.
We're not seeing it. We can't see the chart, Bob.
What's that?
We can't see your chart.
Get out of here. I did all of this and you can't see it?
No, but we're listening.
Thanks for chiming in, asshole. Let me go back down. 12 months, fully left-sided still, right? 1 month, still left-sided, right? Hasn't rolled, hasn't taken out the momentum level. Weekly, Microsoft. I can't believe you fucking let me do that. Weekly, a little chinks going here. Slope starting to change, right? 3-day, we like the 3-day. Fully rounding, approaching that momentum level on the 3-day. And on the daily fractal, we got a right side here, boys and girls, a right side. Bands sloping down. Bands are negative. Closing and lower momentum on the daily. For me, that's my definition of the right side on this. We've reached a right side in Microsoft on the daily fractal.
Yeah, no, let me give you a couple, thoughts.
Yeah. Please nuance me
on Microsoft, because again, I'll just start with, this is a 2-hour chart, and I'm going to start I'm not going to go all the way back because we know it's trending wildly up and it's severe. But this spike here, obviously in the sell-off from 350 to 320, that's a 10% sell-off. That's significant. This rally here shocked me, to be honest with you. I was happy to see it again, back to 340. And now today, that is completely reversed again, like we're back to 324. But here's the thing, Bob. I think you've got a couple things. Like, it's not going to be a whoosh. You got brackets. I'm trying to, let's see, I thought I clicked that. But you basically have this bracket, right here. Come on. There you go. I'm just trying to draw some lines. Make it easy for me, please. But you have that, and you have this below, right? So there's one bracket. And so we're right there. Like, if this thing breaks 320 again, we're going to go down to the next bracket, which, by the way, is right here at 8. And that one is 308 to 276. So we got two playgrounds basically, developing here. So it's not going to be, even though it kind of went up in a straight line, they're going to battle here. They're going to battle here. And when they get below, 275 again, then it's going to go quickly to 213. I think we'll see that price next year. Like, I think we'll see 213 next year very easily. This is just a 2-hour chart. I mean, again, you want to look at it daily. It's going to be way back before. But if this market gets hit in the first quarter, like I think it will, this will be one that will take down the whole market, as it will get hit hard. Like everything, this is still left-sided, right? This is still a daily chart here going back.
Exactly.
This is a decade. So this thing hasn't taken an exhale in 10 years, which, makes sense with where we've been, which is print money, Fed FOMC, and we're coming into the last meeting for the year, and they still haven't raised rates, and they still haven't done anything. I don't expect anything to happen today. So today nothing happens, and the market's been selling off. So maybe we rally tomorrow and then the end of the week, and then into Christmas possibly. I don't know. But my point is, like, they're building this up like it's the end of the world, and it's not going to happen that quickly. But 270 is a key zone. 310, 320 is a key zone. So watch those. Until then, you're trading. You're trading You're trading brackets. So know the brackets and know where the strength and the where to buy and sell in those brackets. And when it breaks, it's easy to reverse and go the other way, because it's going to go down to the next bracket. So that next bracket from here, you basically got a hole all the way from 307. So when 320 goes, it will go down big. Probably not going to happen today.
And for all you gap chasers, still a gap in Microsoft 312.40 to 326.10.
Yeah.
Markets love to fill gaps, so keep that in mind also. All right, Matt, Anything else? Anything else that we want to talk about?
Again, it's kind of getting into that silly season. It's December 14th, 11 days to the birth of Christ, or so the Bible says. Not really. That wasn't even his birthday. So, anyways, it's a silly time of year, and again, I think you're going to see continuing markings, markups, markdowns going on, which makes the first month a little tricky, especially the first couple weeks. So don't get, and then you start earnings, and then earnings come, late January, basically. So that's the cycle that we're in right now. And I would suspect, we're seeing a lot of right sides. I mean, let's look at the Netflix here real quick. I wanted to actually bring that up, and I had a couple others, but Netflix had broke out. We talked about it, and it kind of did its deed from 475 to 575, let's call it 100 points. Then it went up another 120, which is, we said we should see another 100. So it did 120. Now it's
we
back
can't
to
see the chart.
Oh, you should be
Yeah,
able
we
to.
can. I'm just busting your balls. Go ahead.
Anyways, because it's right back to where it broke out from here at 577, down 120, Bob. That's, it's again, bear market territories. They say 20%. So 140 gets you to 560. You're almost there. But, again, it's dangerous to chase these breakouts. These rallies really don't last too long anymore. You're seeing less and less, even in big names like this that are widely held. So massive distribution going on since September, since it broke out. You've seen
Matt, their earnings are coming up, correct?
Their earnings are on January. It's in January.
All right. What was the last ones? I just want to do a little thought process here.
That was on October 19th. Next one will be January 19th. So they did $7.5 billion a quarter. So that quarter is what they did. And before that, they did 7.3. Before that, they did 7.1. So again, kind of slowing down. They're going up, but this one, I would bet they're going to see less. And I would bet this is a miss next time. And with that, you could find yourself really quickly back here to 362, which is a half off sale. Like, it could happen really quickly in this day.
Especially something like this, Matt. You can't tell me at some point the amount of production costs that they incur, because they seemingly film a billion shows a year. It's unbelievable, the amount of content that they're producing. And if we go to a post-COVID world where people aren't sitting on the couch near as much, I mean, how do you not see that subscriptions get penetrated from the wrong end?
Speaking of penetrated and jabs, Pfizer we talked about it yesterday. It was making a double top. It's actually gone a little higher here today, Bob. So if you're one of those crazy breakout chasers, be careful. You're only 13 cents above, and it hasn't closed up here yet. So I would not be chasing this name. I just don't think it's, I think the Omicron stuff is peaked already, but maybe the masses don't see it. But the news is a little slow here. The other one we were talking about yesterday is lumber. Lumber futures got to that number we talked about. We sold some. It's down today, so we'll just throw that out there. It's down $10. It was down a little. It was down about $30 a little earlier. So we'll just peel in on that again. That 50% retrace is right here at. Excuse me, what's the number here? Right around 1100, got up to about 1150 and pulled back considerably today. I think we were a little lower on we were down here at 76. So this to me looks like it's starting to roll. And again, it could go up to 1200. So be careful. But if you are trading, you need to have some pretty significant dollars to, sell one or two contracts. So just keep that in mind. But that to me looks like this, this dead cat bounce is really time right on schedule into the end of the year too, allowing some people to get out that maybe bought here in the 1200 to 1700. Take your loss. It's not going back there. I don't think it is.
Guaranteed, probably.
Well, I mean, we'll see.
Guaranteed, probably.
I don't think it's. I just don't see it. Getting over 1220 or so and getting through the meat of that. So I think it could be having some troubled days before. The other ones that I've mentioned the last couple of days that I still take a look at, I think Microsoft, Apple, Home Depot, Lowe's are all lofty, even with the sell-offs that have begun today and yesterday. But I think there's a lot more downside room. Buy some long-dated in-the-money puts on either of those. I think 3 to 6 months, and you'll be pretty happy on any of those names.
All right, Matt.
In the monies in this case. That's the only time I like to buy is when you're fully beginning to roll over in some of these names. Then you buy puts. Not on the way up. Not on the way up.
All right, man. We got the FOMC tomorrow. The announcement anyway. I actually thought that we'd be chopping more than we are. We still seem to be fairly content with this trend lower.
Yeah, we're just dragging on the bottom. It's lunchtime. We got another hour, but I think this boost could, again, the NASDAQ rather could, definitely could test the low of 15.5. And if we fail there, by the way, that's a significant below that. Don't forget, we went up 2,400 points on the NASDAQ from October 1st until, that November high. So 2,400 points, Bob, is a large move. We're half back again. This is the second time we've been half back. And I'll just bring this up because I think it's important. It's an important juncture for the broader market. I don't know if they save it here for the holidays or what they're going to do, but this 15,500, which was the fish trade bounced off at the first sell-off, the first Omicron news into Thanksgiving, right? And we talked about that level should hold. It did. It went up 900 points. Now we're coming back. Are we going to test it? Are we going to go through it? If we go through it, you're looking at 15.4. Next level below that, 15.1, and below that, you're getting back to where we started from, 14.8, 14.7, all the way back down here, get you back down here. So if we don't hold this 50 on a close, be careful, especially how toppy this is. I mean, this is a massive distribution has been happening the last 2 months. Massive.
Along that line too, I saw a thread talking about the pace at which stock buybacks are going on at the same time, the pace at which insiders are selling their share of their companies. Seems like a perfect way to capture the top.
Yep.
And bank all the money. And I've said this before, if the Fed is not trading this market and creating or developing a giant short position, they're not doing it right, as far as I'm concerned. If they can be long and take assets onto their balance sheet, why not be able to short them and save us all on the correction? We'll
never see their trade sheets, but
for sure we won't, but they better be trading to the dark side like M. Davio here. Anyway, that's all I got. That's my opinion. It's like an asshole. Everybody's got one. I stick to price discovery, Matt. And as a long time Chicago trader, the trading floor motto is my word is my bond. And don't piss down my back and tell me it's raining. And pretty much a great way to live your life, Matt, and the people around you. Anyway, that's what we got. Please join us at marketvitals.io. Please share and retweet the broadcast. And buy some swag from Manja TV at rudbubble.com. Buy some rub at Amazon. Matt, thank you so much.
Thanks, Bob. Have a great